Welcome back to Trading Hour. Well, Ashi Anand from IME Capital joins us now to discuss the market fundamentals and his top sectoral picks. Thank you so much for joining us, Ashi. First up, give us your take on the markets, and we also understand that you have a special interest as far as the digital disruption PMS is concerned, where you have a lot of the new age companies. So first up, how are you looking at markets currently? And also, given the kind of disruption some of these players are seeing, which are the ones that you like the most?
Sure, excellent. First of all, thank you so much for having me on the show. Just starting off with your question around the market outlook, what you have clearly seen over the last couple of months is a certain cooling off of the overall markets. This is coming off a very strong up move that we've seen post-COVID. You've had 2.5 years of just a sustained kind of an up move. I think given the fact that valuations have probably run a bit ahead of fundamentals, especially in certain sectors, a certain amount of cooling off of the markets is actually probably good for the longer term health of the bull market. One of the key factors behind this cooling off has actually been growth, which we are clearly starting to see slow down. You have seen this in terms of overall economic growth numbers. You have seen weaknesses in kind of government capex. Now, this is something which we do expect to kind of come back in the second half. So the current kind of growth weakness that has kind of impacted overall economic growth in the first half should see a recovery as we go into the second half. But an important element here is that consumption has been kind of weak for a couple of years. 2 years back, it was actually the rural consumer which was weak. You're now starting to see weakness in urban consumption. I think given where markets are in terms of market levels and market valuations, in order for markets to get back towards a sustained up move, you need greater clarity around overall growth coming back. This is both in terms of capital spends. You need government capex to come back, which is expected in the second half. Private sector capex momentum to also improve. There are clear signs of factors that will drive this. And we believe that consumption may take a couple of quarters to come back. It's really just some form of a lagged impact of the interest rate cycles the interest rate cycle and the inflation that has impacted kind of consumption demand. Because of this, we kind of expect kind of growth to possibly be a bit muted in the second half, but a much stronger recovery to happen as we go into FY26. Broadly, this could become a very interesting period for investors to really participate or accumulate kind of stocks at valuations that may be more attractive as you're going into a strong growth recovery into FY26. Around the second question around digital disruption, PMS, and outlook on the space. So this is actually a strategy that we launched in Feb of 23, at a time when there was great distress in the overall space. When we evaluated companies in the sector, I think what we very clearly recognized was that markets seem to be underestimating the sheer potential for strong outperformance of growth over the longer term. We're not just talking over the next 2 to 5 years, but over the next 5 to 10 years, we believe there are multiple factors that will drive to continued value migration away from traditional businesses towards such digitally native platform businesses. You're seeing this across segments such as food, beauty and personal care, payments, across different sectors of the economy. There are digitally native businesses that basically have growth momentum which is substantially higher than what traditional businesses have, and we believe this growth momentum will sustain. The one thing that I think markets were really underestimating is the longer term profitability of these businesses. And I think this is something that market participants are still trying to understand. But if you really build out longer term projections and if you go a bit deeper into cost structures, a very large amount of the current costs are really associated with hyper growth that these businesses are currently going through. As these businesses start to mature, there is substantial room for cost reductions, operating leverage, and also forms of monetization to actually come in, which could lead to these companies turning highly profitable as we go into FY26, 27, 28. We believe a combination of this very strong growth and a shift towards profitability create a very strong foundation towards kind of value creation. And that is why we are so optimistic on this theme. Just quickly to recap, just quickly to round off in terms of companies that we really like in the space, we really like the entire food delivery and quick commerce space. Fintech is another area which is clearly very interesting, and also vertical related e-commerce.
Okay, all right, Ashi. Would have liked to chat a lot more, but completely out of time. Thank you so much for joining in today with those thoughts. With that, let's quickly take a look at the markets as well.